Morning, everyone. So we had a big oversold bounce yesterday. After coming off 15 bucks in 2.5 days, we had the gap up. We had the initial failure at 262 on the open. We made the higher low. We talked about the idea of after an initial sell-off in the morning, not going all the way down to here, but some sort of higher low. 260 was the obvious spot to look for a move down from 262. We did flush through that. When we got back above, that was the beginning of kind of market stabilizing and setting up for the afternoon reversal.
Just a few minutes here to the open and pit trading in energy markets.
This morning's gap up
holding on gains about
over
1%.
Over 50% move. This line right here, in fact, that I put here is about a 50% retracement from high to low here. So I think you can kind of use that to gauge the market today. And support in this area here, and then if we get another leg up today, that takes us into the 268 area, which I would think that high probability of failure. So already we've come off over $1 since 6 o'clock this morning. We're up at 267. We had a lower high here at 75 cents, and now we've come off about 90 cents or so from the last hour and a half. So it's pretty slow. Hopefully we'll get a flush right on the open into this area here, and we'll see if we catch a bid, get back above, look for a move back up to pre-market resistance. Holding below 265, I would be a little bit more concerned about a larger retracement inside of yesterday's range. Looking at the afternoon move, got above the morning high, which is 263. Moved sideways for about 20 minutes, and then had that $2 move, or $2.50 move. So volatility is still really good. It seems like it's going to be around for a while. We're 2 months into volatility now, and almost 2 months into it. And it's great. So great in terms of moves. If you get on the right side of a trend, it can be good. And then also in the market itself, obviously there was a short on the open, and there was a long trade, and there was another long trade in the afternoon. So there's just, with this amount of volatility, there can be more really good risk-reward trades intraday, which is good for us, as that's our trading time frame. IWM. So let's see, I haven't even punched it up until right now. So let's see how it did versus what we drew out yesterday. So this is pretty good. 150.50. I guess that was kind of where we popped to at the end of the day, the prior day. So that was clearly that was just as buyable as the SPY. Flush through 260 was buyable. I mean, you got your retest here. And then when it got above it, we had a leg. We took this out pretty easily, 153. And we held it. So yeah, I mean, that's why, you game plan every morning before the market opens. You want to understand areas where you might be a good short opportunity, a good long opportunity. If you can't cover everything, obviously, you do some automation. So for today, 153 is the spot. To 152.70 to 153, look for support there. Supports there, gets back above 153.40. You look for that move into 154, where it's already been up there in the pre-market, but that's where the down move started on Friday. All right, so a couple things in play. First one is MKC, which, let's just look at the daily first. So it's been almost a 2-year wide range consolidation. So it had a pretty wild move. So it was up to 109, 110, came back down to 100. It ripped up to 112. Coming into earnings, they dropped it down to 105. That was probably just the market pulling it in. I was not impressed by the guidance at all, considering that they have a much lower tax rate with everyone else next year. And so my thought was that it would be a short into this area right here. So kind of shorting in this area here, and then a confirmation would be starting to hold below 110. Maybe move back down. What I put for support? 108.70 as the first spot here. And 108 here. So that's the trade that I'm looking at. Obviously, no volume. They're doing a conference call right now. There's no volume in the pre-market, so it's going to be really dicey on the open. Remember, for those of you who are new, the more volume we get in the pre-market, the more we can kind of draw conclusions on where interested buyers and sellers are and how important levels will be. Right now, because of the lack of volume in the pre-market, I'm going on the higher time frame, multi-week chart. Next one is OSTK, which we successfully caught a bounce on this one a couple of weeks ago off of this gap down here. It had come off from 60 to 40 in a few days. So bought it right on the open at, I think it was 40.50 maybe. And it just shot straight up to 43, 44, sold it, and that was it. The next day, it did have follow through back up to this 48 resistance area, and then stayed below that for the next few days before coming off again. The catalyst for this is they announced a secondary of 4 million shares. The guy who runs this company is pretty savvy. He raising money. It increases their float by 20%. So, when I saw the news in the after hours and I saw it was down here at 40, for a second I thought about buying some here, but then the amount of shares that they're issuing is quite a lot, and it an overshoot below 40 seemed like a pretty real possibility to me. So right now it's still hanging out here at 40. I guess we're going to see when the market opens. If we go back a little further in time, you can kind of see this uptrend. This uptrend broke. Did a backside test of the trend and failed there. We go back to the end of the year. So we're kind of breaking below that. So 39 is the next level. And below that, I put 35 because that's what it is. I don't know if it's going to have enough juice to the downside to go to $35, though. It's certainly an overshoot between 38 and 39, and then kind of see. Right now it's down 10%, so it looks like the short sale restriction rule will come into place if they flush up below 40 on the open, which means people can't hit the bid unless they're long, which will change the way that it trades. So I think my first thought is if it popped on the open, I wouldn't look for the same as last time when we saw a $3-4 move when we bought it. I would look for a smaller pop into like here or something, and then I would look for it to roll over again and go down to $38, $39, and then kind of see what it does from there. Let's take a look at BHVN. So this is one, turned out to be the best idea yesterday. The phase 3 data looked good. It was gapping down and supposedly delaying the timing of the application of the drug. Maybe it wouldn't be that good with competition. I think it was probably just manipulated down by some people who wanted to buy it a lot cheaper. And so bought on the open at 17.10 and 16.65. If we zoom in on it, you can see that the initial buys were, my initial buy was right here into this red bar. And then after it took out the low and got back above the original low on the open, and these two green bars here was holding above 17, I added to the position right here. And then it just failed. And I hit out of it. Probably could have held some to below 1650. It didn't bounce for a couple hours. I think right as I was leaving the desk, it was kind of stabilizing above 1750, and then basically just filled the gap. So, this is probably one of the cleaner trends you'll see right here. It accelerated, seemed like maybe it had put an awful blow off top, but it actually held and had a second leg to really just to fill the gap. So if we look at it, it did come all the way back down to this consolidation. So you could have bought into this if you were watching it closely, 21 to 2080. And did it get back up to 24? Yes, it did in the pre-market. So I don't think there's really a lot to do in it today. I wanted to just highlight it to show you that if you were on the desk and you did see it consolidating here tightly above 17, or even when it went to 18 and it came back down to 1750, there was a couple, and this is a very tight consolidation. What you're really looking for is like just a compression, and you started to get that at 1020, where this is usually a sign when you get compression of people no longer willing to people want the stock. They're just not letting it fluctuate as much. You can even see here it spiked up a little bit. Probably some algo picked up on the fact that people were starting to buy it here, and it went up, and then they didn't chase. They were very smart. It was just very slow and steady until it finally got above 18, and the sellers gave up, realized it was trending. So for today, if it does fail at 24, I would look to see if it comes into 22 and a half. What I put on the sheet? Yeah, I mean, these are really the deep pull-ins, the 20, the 21s. If by some miracle it came back down to here, to 20, to this spot right here, you definitely want to buy it. But more realistically, if it failed at 24, a move back down into 22 and a half to 22 would be, I would think, what you'd be looking at. And then Facebook, they did flush that through 150, and it had a really big bounce. I would think that the bottom is in on this until some really bad news comes out on it. If we just put this in perspective, the first day we saw it on the gap down on the news, where I thought it was a big picture short, was here, where it gapped down, this data 180. We focused on the short for the next couple of days. They did have a decent bounce. In these situations where something is pretty bad fundamentally and you get these big moves and you get the first big bounce, usually you get a minimum of retest of the lows, if not a flush through. So we got that, the flush through. And we, it came all the way back down, took out 155. Didn't quite get to the bottom of this little range here, but got inside of it. And once it got back above 155, it was just, you could start to think about it moving into the 160 to 165 area. So let's zoom in. So pre-market was up at 162. It's already come off $3.50. I'm a buyer into this area right here. So I think last time it had a big bounce in the initial days when it sold off. The next day it was gapping up, and we bought it to the pullback right on the open and caught a pretty nice move to the upside. We don't get a flush to 157. It looks like there's people buying it here in front of 158 now. It gets above 159. I'm looking for a move back up to this here. One thing I'll remind people, because I saw this last time, it had been played for a few days, people kept on going to the well. Like today, after a $10 move, of course you want to take a look at it, because it could easily, even if you cut the range in half, you have a $5, $6 range to work with, and maybe tomorrow will be in play. But if you keep on going to it as it narrows and narrows and gets more random, that's when you start to get trouble. And that's just something you pick up with experience. But certainly for today, easily, we're working with the pre-market high down to potentially here. This is a $6 range, half of yesterday's range. That's absolutely worth paying attention to. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play, what levels in those stocks are important, and how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.